Good morning and welcome to VSA Morning Miner. It's Tuesday, the 14th of January, and I'm joined by Paul Rankin. Paul, how are you this morning?
Very well, thank you. How are you?
Very good, thank you. It's been a pretty volatile couple of days for commodity prices. Silver had another jump yesterday. I think it briefly touched 90. It's certainly been well above $89 an ounce. Gold price jumped as well. Tin went through 50, and heard there's even been some trades well above that overnight. So everyone is scrambling for metals. In the news flow, what have we got this morning, Paul?
Well, we had a couple of quarterly production reports and full year results, as well as guidance out. Two companies in particular that come to London attention: Atalaya Mining and CAledonia Mining. First off, with Atalaya Mining, we had a story there with uh, mined output was 3.4 million tons, or 3.9 million, which was 400,000 more than the fourth quarter of 2024, and 3.7 million tons on a year ago basis. Uh, they had plant processing there at 4.1 million tons, which is down a little bit actually from a year ago. Copper grades came in well lower at just 0.33% copper there. And that's down on all the other comparable periods as well. We will hope that copper grade will recover here in the next quarter or two. It may be just a question of mine sequencing, so we'll see. And other than that, we had copper contained in concentrate sold was 11,800 tons, which is up on the fourth quarter, but down on the third quarter of, up on the fourth quarter of 2024, but down on the uh, uh, third quarter of 2025. And the realized copper price of $5.10, well up on the comparable periods. So cash and equivalents standing in there at euro 166 million, whereas at the end of last year it was just 53. So these higher copper prices offsetting the drop in grade. Their production guidance came in at for next year at something over 50,000 tons of metallic copper. So that's looking better there.
One thing I'd note on the guidance for next year, it does look like there's quite a significant increase in waste mined, so that might have an impact on margins. So it does look like copper grades are going to go up as well, although full year guidance is pretty much flat, maybe slightly higher if they hit the top end of that range. Obviously, copper prices have moved beyond that average realized price for the fourth quarter, and the share price has been steadily moving higher. It's a pretty good looking chart. Market cap's now about 1.4 billion, I think. Moving on to
Moving on to Caledonia Mining's numbers here. That's the Zimbabwe gold producer quoted here in London. Fourth quarter production was 17,367 ounces, which is down from the fourth quarter of 2024, which was at almost 20,000 ounces. Adversely affected by lower tonnages in the higher grade areas from the mine. So you'd call that mine sequencing. And they did have some interruptions in power supply, though, which is kind of surprising given the situation where they do have grid power, but also the backup solar from their solar farm, as well as backup generators as well. So it's a little bit disconcerting, I think, that they had power supply problems at Blanket. All mine cash costs came in was at $1,500 to $1,700 an ounce sold in the second half, and all-in sustaining costs at $2,100 to $2,300 per ounce. Their cost guidance is going to be higher still for the year 2025 or 2026 due to operating costs across the production profile, mining, milling, and administration. And total group capital expenditure they expect to be in 2026 at $162 million US. So we would hope, I think, that they show on their production guidance here of the high end of the 76,500 ounces to be produced, because that would be quite a decline actually for the company over the last 3 years as far as total production from Blanket. So hopefully we would get better numbers or revisions to these numbers going forward. But it looks like they're being pretty conservative at this point.
Yeah, obviously it's a big job building a second project, but quite significant free cash flow, 150 million or so, based on those guidance numbers. But obviously, with being based in Zimbabwe, that comes with quite a hefty discount on your valuation that you're unlikely to remove, regardless of the pricing environment.
Mm-hmm.
Paul, we also had from F3.
Yes, that's right. The VSA client and Athabasca Uranium Explorer F3 Uranium announced their final scintillometer count results on their fall drilling program on the Tetra zone there on their Athabasca Patterson Lake North project. That zone is down in the southwest corner of the property position. And they had found that the drilling is indicating that there is a plunge length extension now to at least 135 meters in length. And they've got a good 300 meters or so that as measured by drilling so far to test in an up plunge direction toward the erosion Athabasca unconformity. So that's looking fairly positive there at this point. The numbers are coming back on the counts, so that would indicate that there would be intervals of about 20 meters or so of average thickness, which should be in the ore grade range based on the on the radiation counts. So looking positive there at this point. We'll be interested to see what they might do in the coming year on some of these other zones they've identified across the property as well.
Great. All right, Paul, thanks very much. We'll be back tomorrow.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.